Hello, everybody. Welcome to Thursday. The S&P 500 was down 0.7% today. We still have a yellow signal on our fast trigger on the stock market and no change, both greens on the bonds. We made some changes today to get more conservative on the stock market portion, especially in our IRA type of accounts that don't have the tax consequences at this point. The market was struggling today with the continuation of the banking issue. We talked about that a little bit last time, that the PacWest came out, said that they were pursuing a sale, came out today, said that their deposits are up for March, but they're still pursuing a sale. And so their stock was down 51%. Western Alliance came out and looking for some different options from a capitalization standpoint. Their stock was down 39%. First Horizon was down 30%. So this is a continuation of this story for these regional banks. And, again, I mentioned before, we heard about all of those banks originally and stopped with kind of First Republic. And now we're hearing about new banks. And so, unfortunately, in today's world, money can move so rapidly out of these banks that you can go from looking good to all of a sudden needing, some help pretty quickly. So, going to have to see how that plays out. You can kind of combine that with the debt ceiling situation that's out there. These are two things that are weighing on the market. One nice thing that did happen today is that after hours, Apple reported and they beat their earnings expectations. Overall, earnings have been a really bright spot here. They've been beating expectations very handily, and Apple's up after hours too. So maybe that helps tomorrow. We'll see what happens, but I think there's some concerns. And if you look at what the futures market is now saying is going to happen to the Fed funds rate, it just got increased by a quarter point yesterday. And now the projection is that they will be decreasing rates by July by a quarter point. And there's a 1 in 4 chance that we do a quarter point cut in June at the next meeting, take back the one we just did here yesterday. So that's kind of fascinating. Obviously, that's in response to what's happening to the banking. As more of these banks become involved, it just means that more and more credit will be, restricted as far as that goes. And there's a lot of companies out there that use high amounts of leverage, and they rely upon money kind of constantly coming in from a borrowing standpoint. And if they can't find that money, that's going to be a problem for those particular companies. So that's what makes it kind of spread beyond the banking situation. So I think this is a good time to step back and be a little bit conservative. We have some of our money today went to T-bills. Some of our money went to more conservative investing areas, with high dividends and whatnot. Some of the money actually went to some international pieces also. The dollar has been coming down with this debt ceiling argument. That makes international go up because you're having foreign currency. So I haven't had much international in the portfolio since 2020. So we'll see how that goes. So far, so good. But again, we're prepared when we get a red light signal to go, to T-bills and to kind of sit through this. A combination of the debt ceiling and this banking crisis are, definitely out there now. One thing I'm always talking about is be very careful that you don't want to respond completely to the stories, the banking, the debt ceiling. You want to look at the price because sometimes the stories are, not as important as they seem. Or sometimes it's just the opposite. We don't know what the stories are. But if you watch the price and the motion in the market and you see what's happening, you can kind of tell what's going on. And of course, we've had 4 days down in a row here ever since Janet Yellen said that we were going to run out of money on June 1st. So, definitely seeing some evidence here that we probably should be a little bit conservative and continue to do that as far as that goes. So that's what's happening. Of course, we have our show tomorrow. This is a really good week to sign in and watch. I'm going to be doing the summary. There's a lot going on this week. It'll be kind of, I think, interesting to see that in totality and see how that plays out. So feel free to join us. It's on YouTube. It's Talk Money with Tom. And you can submit questions that you might have about what's happening, and I'd be happy to answer those live on the show also. So look forward to seeing you there. Thank you very much.